Welcome to The Explainer. Today, we are tackling a big one, a stock that just shot up a massive amount in a single day. We're going to deconstruct the data, see what's behind this crazy surge, check for any red flags, and then look at where it might be headed. All right, so let's jump right in. What's the big event? What happened that suddenly put this stock on everybody's radar? So get this. On October 6th, 2025, a company called Dragonfly Energy Holdings, that's ticker DFLI, just had its stock price explode. We're talking a jump of over 24% in one day. And this wasn't some quiet little move either. The volume was insane. Over 89 million shares traded hands. When you see that kind of volume, it's basically the market screaming that there's some serious buying interest. So you gotta understand, this wasn't just a blip on the radar. This was a major market event. Closing at $1.42 completely changed the game for this stock's chart. And that means we've got to dig deeper into what's really going on here. Okay, so we know what happened. The big question is why? Let's pop the hood and look at the technicals. See what clues we can find to explain all this bullish momentum. First up, we got to talk about something called moving averages. They're a super common tool for analysts. Basically, they just smooth out all the chaotic day-to-day price jumps so you can see the real underlying trend. And wow, this is where it gets really interesting. That closing price of $1.42, it's not just a little bit above its recent averages. It's completely blowing them out of the water. We're talking the 5-day, the 20-day, and even the 50-day. For an analyst, that's a huge flashing green light for bullish momentum. And it's not just the moving averages either. The analysis points to a whole bunch of other signals all saying the same thing. You've got the MACD, the ADX, the Arun indicator, and the takeaway is simple. They are all screaming that this upward trend is really, really strong. Okay, so everything looks great, right? All gas, no brakes. Well, not so fast. In technical analysis, when something looks too good to be true, you start looking for the catch. And yeah, the data is definitely waving a few yellow flags here. To see what I'm talking about, we need to look at an indicator called the RSI, or Relative Strength Index. All it really does is measure how fast and how far a price has moved to see if things are getting a little overheated. So how's DFLI doing on that front? Well, the general rule of thumb is that an RSI reading over 70 means a stock is overbought. And DFLI, it's sitting at 72.17. So yep, it's officially in that warning zone. Think of it like the temperature gauge in your car creeping into the red. It doesn't mean your engine's about to explode, but it's a pretty clear sign that things are running hot and it might need to cool down for a bit. In trading, we call that a pullback or a correction. And there's more. Another tool called Bollinger Bands is telling a similar story. The price has actually punched above its upper band. This is what analysts call being overextended. The classic analogy is a rubber band. You can stretch it pretty far, but the further you pull it, the more likely it is to snap back, hard. So now we've got this awesome tension, right? On one hand, you have this incredibly powerful momentum pushing the stock up. On the other hand, you have all these warning signs flashing overheated. So what gives? Let's look at what could happen next. Right now, analysts have their eyes on two key numbers. Think of them as the floor and the ceiling. The floor, or the support level, is down around 53 cents. The ceiling, or resistance, is up at the recent high of $2.28. The next move will likely be defined by these two levels. This really sets up two main possibilities. The bullish story, all that momentum just keeps on trucking and the stock smashes through that 228 ceiling. The other story, the overbought warnings prove right, the stock takes a breather and falls back toward that 53-cent floor. Okay, let's tie this all together. When you weigh all this conflicting info, what's the bottom line? What's the big takeaway here? It really all comes down to a classic battle in the market. You've got this immensely powerful, bullish momentum running head-on into these crystal-clear technical signs that things have just gone too far, too fast. And the conclusion from the source analysis says pretty much the same thing. It points out that, yeah, the long-term trend looks good, but the short-term volatility is just off the charts. So the key word is caution. So that's the big question we're left with, isn't it? Is this a real, sustainable breakout for DFLI, or is it a temporary bubble just waiting to pop?
The analysis doesn't give us the answer, but it gives us the framework to understand the incredible forces at play here, both the potential rewards and the very real risks.